How do I look at Deutsche Bank? So we're at a record low for the shares, but there's also a general market sell-off.
Absolutely. I mean, I think with Deutsche Bank, the issue you've still got is, if you look at consensus, this bank may make $1.5 billion bottom line next year, maybe. That's assuming it hits its 23 billion euro cost target on revenues of 25 billion. And the revenues continue to slide. So people may say it's 0.3 tangible book, it's really cheap. It's not going to make an ROE of 3%. On a PE next year, it's on 11 times, which is more than the sector. So the issue you've got is, fundamentally, actually, I look at it and think, well, I can understand why the valuation's there. I think the Danske thing is a bit of a sideshow. It's a correspondent bank. Our litigation guy, Elliot, he thinks there's about $1 billion of risk currently outstanding, which, relative to some banks, litigation-wise, isn't that much. I think they've got bigger fish to fry, and the biggest problem they've got is top line. Where does it go?
If you look at European banks in general, so away from Deutsche Bank, but looking at them all, is worst-case scenarios priced in, whether it be Brexit or lower for longer interest rates?
Well, the problem we've got is that we're now at the bottom end of the trading range we've had for years. I mean, the sector's on about 0.8 times tangible. It's discounting a cost of equity of about 11 to 12%, i.e., there's no growth, which we know there isn't. There are some unknowns out there, trade risk, Greece, Italy tomorrow in the budget. I mean, there's plenty of things still out there. So I'd look at the sector and say it's cheap, but I struggle with catalysts and there's no momentum. And the one thing we do know is provision charges will probably be a bit lower than consensus next year, but that will turn. And the thing we don't know is what's going to happen to revenue.
Are they going to have to go out and get cash? I mean, are we really pricing in share dilution into next year and even into 2020?
Are we talking Deutsche Bank? Are we talking the sector?
I could talk them all, the sector as well. I mean, I know Deutsche Bank is worst chart in the class, but come on, John, all these charts are really rocky, aren't they?
It's not great. I mean, no, I don't think we need capital. I think maybe Italy, some of the smaller banks, there's still a question mark there depending on how quickly you have to clean up the balance sheet. Greek banks we'll hear about the day after tomorrow. They definitely need cash, or they need a very, very good way of getting bad debt off the balance sheet. But as a sector, capital isn't the problem. The problem is there's no growth. We're kind of returning 50% payouts on ROEs of 7-8%, and you've got no top-line momentum at all.
John, have you seen a paper that explains how these guys make money given negative interest rates? I haven't seen it.
Well, you say negative interest rates. The fact is that the majority of, say, European banks' balance sheet is retail. And you're not making a fat margin, but you're still making money on mortgages. The problem is it's not going back up. So you're making a net interest margin of 1.2, 1.3%, your spread. You've got your cost base, which is a huge retail network. So that's why your ROEs are low to mid-single digit. But they are making money. The negative rates is more to do with the sort of wholesale banking than it is the majority of what European banks are.